The trend reversal in the Dow was not hard to identify using candlestick signals. The uptrend was in progress as long as we didn't see any candlestick sell signal close below the T line. This signal right here, a bearish engulfing signal after a doji, is a very strong sell signal. It's called our left/right combo. It's significant because anytime you see a doji involved with a reversal signal, it's going to be that much more poignant. And the fact that they did a left-right combo that closed below the T line was the first indication there had been a change of investor sentiment. Secondly, the left-right combo is a very powerful sell signal. Yesterday, when it did a doji, it gave us a very distinct advantage for telling us what the trend was going to do. Remember the doji rule. Prices are going to usually move in the direction of how they open after a doji. The fact that they couldn't get back up above the T line and they were trading lower told us we more than likely were going to trade lower, which would have confirmed your bearish doji sandwich. And remember what the results are of a bearish doji sandwich. Usually more downside. These same factors were evident in the NASDAQ that also had a bearish left-right combo, and then today had a bearish doji sandwich confirmed with trading back below the T line. It could support here, but notice your stochastics are heading down. There's a good prospect that if this level, the 200-day moving average, doesn't hold, you could be heading back to this support level or the 50-day moving average. This combination right here allows the candlestick investor to be prepared for going short. And there's lots of sell signals or short signals that would have allowed the candlestick investor to be prepared to see that there had been a change in the market trend. Rare, for example, did a dark cloud, now has done a bearish doji sandwich, which you could be shorting today on weakness, but now definitely going short with the prospect they could be coming back to the 50-day moving average. Once again, this sell signal with the market selling off gives that much more, let's say, emphasis to the downside. The more pieces of evidence that there's been a trend failure, the more the probability you're going to be in the right direction at the right time. You can see the bearish engulfing left-right combo failure of the 50, which had been a failure in the past, telling you this downtrend is in progress. Then after your bearish left-right combo, you had again a bearish doji sandwich closing below the T line, making this your next likely target with a high degree of probability. Although there are more downtrend signals or reversal signals in existence, Facebook, you can see, has a fry pan bottom with a doji right here at the breakout level. So it traded up $1.25 today, even though the market was selling off. And there was the little signal. There was your best friend signal, the doji followed by a gap up, starting the uptrend of this move. Now you've got a very simple evaluation. If it opens positive, you've got a doji sandwich breakout putting you into a wave 3. If it opens lower, more than likely you failed at a double top here. You close out the position. Any analysis or all analysis based upon candlestick signals is based upon what has happened time after time for the last 400 years, giving you an advantage to be moving much more quickly for opening or closing profitable positions. That'll be it. We'll see you in the chat rooms.